bigger profits in your small business? Like many of us, I'm sure you're feeling it. Business is hard, and now more than ever, you need to have a plan to help you make sure that you can not only survive, but thrive. I'm Marcia Reiner. I'm a business strategist on a mission. I've helped tons of small business owners to create tangible plans that guarantee sustainable profitability and guide your growth. I want to share ideas that I've earned and learned with you on today's Profit with a Plan podcast. So I'm super excited to have my guest with me today, Ruth King. Ruth is a profitability master and has the passion for helping businesses to get and stay profitable using the latest systems, processes, and technology. After 12 years of being on the road, doing 200 flights per year, I'm sure she got great miles doing that. She knew that there had to be a better way to reach business people who wanted to build their business and train their employees. She began training on the internet back in '98 and began first television, like broadcasting, in 2002. Her channels included HVAC Channel TV and ProfitabilityRevolution.com, as well as others. Ruth holds an MBA in finance from Georgia State University and a bachelor's and master's degree in chemical engineering from Tufts University and the University of Pennsylvania, respectively. Her latest books, Profit or Wealth, with a question, will be released or was released on October of 2020. And this book preceded by The Ugly Truth About Cash and the #1 best-selling book, The Courage to Be Profitable. These books were named 2 of 37 books startups that you should read, along with the books of Napoleon Hill, Stephen Covey, Dale Carnegie, and other esteemed authors. What a great place to be. She is also the author of 2 other award-winning books, The Ugly Truth About Small Business and The Ugly Truth About Managing People. Well, we want to get out of that ugly truth phase here and bring it and launch it. Ruth, thank you so much for being a guest on Profit with a Plan today.
Thank you, Marcia. It is great to be here.
Thank you. I appreciate your opportunity to stick with me. I know we've had some interesting conversations in the past, so this is good. This is good.
Absolutely. Yeah, I mean, you and I both have the sense that business owners need to be profitable and stay profitable, because if they're not profitable, they will eventually go out of business, as you well know.
Right. And you know what? I thoroughly believe in my soul that us entrepreneurs and small business owners, we're the lifeblood of the economy. And if we can't continue to move and be there, then the world's not going to have us or be as successful, because those big conglomerates can only do so much. They don't really, they don't lead the everyday business, the everyday person. They're not there for them. So it is my passion and mission, as it is yours, to make sure that they survive. So I'm glad you're here today.
Yeah, my pleasure. Thank you for having me.
Great. So I love the names of all the books and quite accomplished. What are some of the things that you believe are super important for business owners to have in place to be profitable?
Well, number one is you never depend upon percentages. I mean, I can't imagine you going to the bank with a 10% net profit and saying to the teller, here's my 10%, can you deposit it for me? Not gonna happen. Yeah. The only thing that you can take to the bank are dollars. So I don't live off percentages. I don't live off of gross margins. I live off of, all right, what was your gross profit? What was your overhead costs? And your overhead costs, and you break that down per hour of billable time or per hour of revenue generating time. And then you end up with a net profit per hour. You and I talked about one of your clients who thought he was, shall we just say he was earning only $75 net profit per hour, and he thought he was earning 500. So
yeah, it was pretty big in the disparity there. So yeah, it was a big aha moment.
Yeah, and so I think a lot of small business owners, when they stop thinking I made 10% or I made 5% or I made whatever it is, and start thinking in terms of the dollars that they made and what that really translates into the number of billable hours or the number of revenue producing hours. And a lot of small business owners, their net profit per hour is like $3.52, and you can make more at a fast food restaurant than that. Why are you doing this?
That's the craziest thing ever, that realization, and so many people just go to work and do their job and they don't break it down to what they're truly earning per hour. And it's a big aha when you get into it, and you pull it back out, because we all got into being a business owner, an entrepreneur, because we thought we wanted this, fantastic lifestyle, and making all this money and having our own freedom to make decisions. But holy cow, we it's rarely what it turns out to be, right?
Yeah, it really and truly is. I don't think any of us got into business unless you're a CPA or a bookkeeper, and even me, to do the financial side of business. We just don't get into business that way, but it's the financial side of business that will keep us in business. Because if we don't pay attention to our profit and loss statement and more importantly, our balance sheet every single month, we have no clue. And our balance sheet and P&L might be going, hey, we got a problem here. And if you're not looking at it, it's going to bite you in the butt. And if I may, let me tell a story about it.
Please.
All right. So one of my clients has been my client for a while, and we always do a budget every year, and he sends me weekly numbers every week. And he was doing fine until August, and so he stopped paying attention. And so I get the numbers every week from his bookkeeper, and the bookkeeper sends him the numbers every week. And I watched him not make budget from like August on. And I'm going, you're going to start running into cash flow problems. And I'm screaming as much as I can because I can't run his business for him. And I get an email from him the week before Christmas saying I'm out of money. And I'm like, did you even look at what we've been talking about and sending you for the past 3 months? Well, no, I really didn't pay attention. It was his wake up call. He was lucky enough to have a line of credit to be able to do it, but he just didn't watch and didn't watch and didn't watch and didn't watch. And all of a sudden, bang, he gets hit between the eyes with a 2x4. And sometimes that's what it takes.
And it wasn't a surprise to you and the accountant, because you were going, hey, warning flag, warning, 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 and he didn't pay attention. So what a horrible story.
Yeah, but the moral of the story is now he's, we make budget, or we have made budget just about every single week since this started. And he started getting back at it, and we're getting more and more and more cash in the door because of it.
Good. And, I think that's it. You have to live within boundaries, right? And that's what a budget is. A budget is not a diet, I always say. It's really just a listing of what you have done in the past and what you're projecting to go in the future. But if you don't look at this and you just write checks or stick the credit card in or debit card in, you're never going to know. So I love the idea that you absolutely have to watch your money. You have to watch your numbers.
Yeah, absolutely. And the thing is, I look at a budget in 2 ways. I look at a budget, hey, we're over budget in revenue. What did we do right? Can we continue to do it to be over budget? Or we're behind budget, or we're spending less than we thought we were. Terrific. What are we doing right? Rather than the penalty of, okay, we're over budget in expenses and under budget in revenue. I try to look at it from the positive side, about what a budget can do to help you do what you're doing right even better.
I love it. I love it. So what are some of the things that you can do better in the budget side? And let's talk about the spending, because that's one side of it. And then obviously the income side, we can go hit that afterwards. But what are some of the things in a budget that we can do to make it work better?
Okay, first thing is, all of us have signed up, and I'm sure you have too, for something that was monthly recurring billing for some product or some service or whatever else it is. And we're not using it anymore. I mean, I'm guilty of this too, but we try to go through it at least once a year. Yeah. No, I'm talking about business stuff.
I know, but it's the same line as that gym. You sign up with all intention and you never do it.
And that's very easy. It's a $25 a month or $20 a month or whatever else it is, and you have to evaluate, are you using it or not? And if you're not, get rid of it. I mean, that's easily taken out of a budget from an overhead perspective.
That's a really good thing. Some of those things that they don't think about. I have one of my clients that has relationships with joint venture partners. Something as simple as like a send out cards thing. You're paying $40 a month, and he's never sending out the cards as thank you and relationship building with the client. And so he doesn't want to cancel it because of the relationship. And you have to make decisions, business decisions here. So I think that's a really important piece. What are some of the other things that we might want to look at?
Hold on, I'll give you some more. But if he's spending $40 a month, he might as well use it. Send out the cards. I mean, it's just you might get a whole lot more business in and start the revenue side over that. And so, you've got to spend the $40 because you want to keep the relationship going. But what may happen by spending the $40 of sending out the cards is you get more business in the door. Why wouldn't you do that?
That's a perfect analogy of what you should be doing. I like it. So some of the
Yeah.
other things that we look at that maybe we don't realize we should or shouldn't have.
Okay, the other thing that I would look at is overtime, especially as it relates to office personnel. They get used to being on their cell phone or one of these fun things and looking at Facebook and whatever else it is, and they're not doing their job, and all of a sudden they've got an hour or two extra of overtime, and that's really not what you want to have happen. If they should be able to do their job 99% of the time in the 40 hours that they are there to do their job, and they can't. The question is, are they wasting time during the day, or does that job really take more than 40 hours? And that's something that you can look at. Overtime is pervasive. It's creeping up a little bit at a time, and then all of a sudden it's like, wham, where did this come from? So you're really in a situation with overtime is you have to watch it, and you should have a no overtime policy except if authorized. And that's the way I look at things like that. The other thing that I would look at is marketing and advertising. This is where we get into a lot of the SEO things every single month or something along those lines every single month. And again, is marketing paying for itself? If you spend $100 in marketing, are you getting $100 back in revenue or, in leads or whatever else it is? I mean, those are three areas that instantly can help you.
Wow, those are really important and key points. That controlling the hours of your employees and specifically overtime because you're paying time and a half. But the little things like the marketing and the subscriptions, perfect things. Okay, so we've got three really easy things that you can look at your budget right now, right today, and change. Yay. So let's flip on the other side of the statement here. Let's look at the income side. What little things, ideas can we put in our budget today that might be able to increase the income side?
The best thing to do is what I call reactivating your inactive customers. So all of us have a customer list. And how many of those customers have bought from you, let's say in the last 2 years, but they haven't bought from you this year? So this is now 2021, but let's look at 2020. They've been on a customer list since 2017, but they didn't buy in 2020. So you have an opportunity to reactivate an inactive customer who bought in 2019 or 2018. You got the list, go look at it. They've spent money with you already. They've either given you a credit card or they've written a check or something along, or given you cash. Well, not so much giving you cash anymore, but they've done something to buy, they've raised their hand and they said, hey, I want to use your products. I'm using your products or your services or whatever else it is. Find out why they stopped. And a lot of times the answer you are going to get is, I thought you guys went out of business because I haven't heard from you.
Right.
All right, there's that marketing guy who didn't do the send out cards. I mean, that's a perfect thing to keep in. It's a perfect
and
thing.
It's so much cheaper to keep a client than it is to go out and get a new client. So
yeah,
wonderful
absolutely.
idea.
So that's number one. Number two is, what other products can you sell existing clients who are buying from you every day? And this is stuff that we all know, but the reality is if we don't sit back and look at it and go, oh my God, gosh, I didn't know you guys did this. I have a really good colleague of mine who is in the printing business, or was in the printing business before he retired and sold his company. But he learned a huge lesson one time. He was doing things that were stationery and business cards and stuff like that. And then he went to visit this client one time, and this client showed him this brochure that he had printed somewhere else. And my colleague said to him, well, we print brochures. He goes, I never knew you did that. Otherwise, you would have gotten this work. If you don't communicate all your products and services to your customers, they don't know. They're not mind readers. They don't know what products you have and services you have. Let them know.
What a perfect thing to communicate in your regular marketing to them and your regular engagement, the email campaigns, the send out cards, since we're using that analogy, but to tell them what you do. So many business owners, I think they get in the mindset of just doing what they're doing, and they forget the little simple like almost duh moments, but they're so easy to forget and misplace that they don't do them. And so this is a wonderful conversation to bring those ideas back in.
Yeah.
So we've got the we've talked about the two things. So the re-engagement of it. What's a third idea?
A third idea is to always be asking for referrals. And we can do it on the bottom of our signatures on our emails, or if you're always looking for employees, you can put a little sign on the bottom of it that says join our team and a link to your website where there's a career page on your website. So I know that's not revenue, but that's also finding employees and finding people. So that works really well. But also, like on the bottom of my signature, I have all 5 of my books. And
Right.
it's just one way people, oh, I didn't know you wrote those, and they'll go click on it and potentially invest in the books or whatever. But you don't think of it after a while, it's just there. But it's people who don't necessarily know what everything you do, you can put it there.
Love it. Love it. So I love the idea of going and hitting those old clients from the past and doing the little things on there. What do you think when you look at a budget and you're thinking of yourself, how much extra should I have at that bottom budget? Like, okay, I've got X in income and Y in expenses. What is that Z number I should have left over at the bottom?
It depends on what you want your net profit per hour to be. It really does. Obviously, it should be greater than the amount you can earn in a fast food restaurant. But there are some people who are happy with $20 net profit per hour, others who want 100. It just kind of depends. And the answer really and truly is, all right, you want $100 net profit per hour to do what? It's like, okay, I'm motivated by money, but motivated by money to do what? It's not the money. Money's the tool. One of my clients always, gave part of all of his net profits to a charity that he absolutely loves. So he knows the more profit he earns, the more he can give away. And he also does it from a bonus perspective with all of his employees. They know that they get a percentage of the net profit every year. So if the company makes 10%, they get 10% of the 10%. Divided amongst all the employees. If the company made 20%, they'd get 20% of the 20%. So it's really a very good way of doing it. And so they're motivated by, number one, making sure the company is profitable. Number two, doing the things that they've got to do to keep it profitable. And they get a reward at the end of the year, which is cool.
You know what? Bring everybody, lift the water. As the water rises, all boats lift, right?
That's right.
Everybody goes together. I like that idea. And it's really, it brings on that mentality, because you talk a lot about getting your employees engaged and doing the right stuff. So everybody's pushing the boulder up the hill together. I love the engagement of sharing in the profitability, $20 over. And again, you don't talk in percentage, you talk in dollars. So another little thing I'm catching that's in line with your brand, but to reward. I think that's really how you make the team move that boulder.
And the really interesting part about that, after a couple of years, you probably won't see it the first year, but if somebody's not pulling their weight, you won't have to fire them. They'll make their lives miserable to get them out. And you don't even have to do it because they realize it affects their bottom line and their bonuses. And they don't want somebody who's an anchor.
Right.
They want everybody, going the same way. And you may not even know it, but they'll just quit one day. No, you know it. But reality is they'll make their life miserable and an unhappy place to work for that person. So that person will likely quit, which is what you want, actually.
Right. You want engaged people, and then you don't have to worry about that. If they are doing overtime, it's actually producing income for them, right?
That's
For
right.
the company to get going. So what about in the budget? Do you have pieces that talk about reinvesting back into your company and into your employees?
The training piece is definitely reinvesting in your employees. So there's always a part of it is always a training budget. There's always a meeting budget in there, but that's all overhead. So that's a piece of overhead. But that's a necessary piece of overhead in my mind, because you've got to keep the guys and ladies, trained on the new things that are coming out and things that will help your customers. And if you're into technology and do technical things, obviously training is critical there too, to keep up with the latest things that are going on in your industry. So that's how I reinvest there. And then when you look at the bottom line, you're gonna have to take a piece of whatever it is. If you're making $20 net profit per hour, you got to take at least 5 or 10% sorry, $5 or $10 of that and reinvest it in the company, because you're going to have to pay for raises and all the other things that they can potentially want. So you may look at it at $20. We keep 10 of those $20 in the company, and we distribute the other 10. It really varies by company and what your goals and objectives are, and you
Right.
have to make that decision.
Right. No, this is wonderful things that when you're looking at your numbers. So my father was a very, very good salesman. He's passed on since, but he was a very good car salesman and ran a really good, thriving company. But he only looked at like what the bottom line was. He never looked at all the numbers coming in. And if he had a bottom line, but then he only looked at like the net bottom line, he didn't realize he had to pay people out of that and do other things. So he was spending and living on this like net bottom line, not the final bottom line that he actually had. And so it tweaked his numbers a little bit. But I think it's really important that business owners look at those numbers, and the things that we're talking about today should be basic stuff. But like your example of your client that stopped looking in August and got in trouble by December, it can hit you like a ton of bricks really fast if you don't monitor these things.
Yeah.
What are some of the things that people often forget to put in the budget?
Oh, that's a good question. I don't know. I've probably been doing it so long that we've got all the expenses in there, and
Right.
rarely do we have one that's not. A lot of times it's some asset purchases, things like, all right, I need another truck for an employee. What are those expenses going to be? It's things that are, okay, there's this great training class coming up and it's not in the budget, but it's really important for everybody to go to it. I look at the budget from that perspective. Okay, if we're going to add this as much money in training, where can we cut it in other places so that we can maintain our budget the way it is? Or can we generate enough revenue to be able to cover the cost of this training? And a lot of times I'll look at it that way also.
Nice. So it's those occasional things that people forget about. If we use that parallel in our personal life, we always forget to save for Christmas, but we spend at Christmas every time. So it's those things that we forget that are not monthly things. I noticed also with a lot of my clients that have challenges is that they're looking at fixed costs, but they don't forecast variable costs very well. How do you address that one?
Well, variable costs are really a percentage of sales. They're your direct costs, or they're your cost of goods sold. So you're going to end up with sales minus direct cost or variable costs, and you're going to get a gross profit. The gross profit has to be high enough to cover whatever your overhead is for that particular month. So, again, we go backwards. We start with what we want on the bottom line. We add our overhead cost to it, and that gives us our gross profit. Then we figure out our variable costs, and then we get a revenue or a sales number. And can we do it or not? I mean, I don't start with the sales number and see whether we make money. I start with how much we want and see what sales we have to have. I mean, I flip the P&L on its back, or, upside down 180 degrees. That's how I do things.
And that's a smarter way of doing it, really, is reverse engineering what you want is the end goal and working your way backwards to get that. I love that idea. Okay, so when we look at flipping it on our back end, and we're looking at variable expenses, and we're looking at things, oftentimes business has expenses on the front end, but sales come later. Where do you bridge the gap in that budget to stay close enough to it, knowing that forecasted or future sales are coming in ahead of time, or after the cost have already occurred?
Okay, so you're looking at the difference between a P&L budget and a cash flow budget. The budget we've been talking about is the P&L budget, i.e. revenues and expenses. So what you have to do is you have to take from your P&L budget, and then you have to put it into a cash flow budget, which is not the same thing.
Okay.
The cash flow budget is you begin with a certain amount of cash and what's coming in the door. Now, what will happen is on your cash flow budget, if your P&L says you're going to sell something in January, but you're not going to get paid until March, that gets affected in your cash flow budget. So your collections from the sales are based on when you're going to collect from that sale, not the sale that was made on your P&L budget. But your expenses might be for people to produce it. You're going to have those expenses every single week because they're not going to wait 3 months to get their money. And say, I'm sorry, we didn't get paid from our client yet. You can't get paid. No, that doesn't work. Definitely doesn't. So,
but that's a great conversation, is because some business owners, especially in the smaller level, they're living off of this one document. when there's several layers to that document, having the profit and loss budget and then the cash flow management of that. And they have to understand that there are moving parts and pieces in there that they have to account for. So
Yeah.
that's good conversation.
Yeah, there are two distinct budgets. There is the P&L budget and there's the cash flow budget. You need to watch both.
Yes, yes. And so what are some of the ideas that people can do when they're reviewing this? Is this something that's done monthly? Is it something that's watched daily? Is it weekly? Should they, I mean, do they have to rely on waiting for the accountant to deliver the information?
No, I would say that you review your P&L budget and your overall cash flow budget every single month. It takes you less than a half an hour a month. Spend a half hour a month. All right. Now you're going to look at your cash in your bank account every single day. It will take you 5 minutes. You're going to do a weekly cash flow budget, which will take you 15 minutes, or you'll take your bookkeeper 15 minutes. I mean, you don't have to do the nitty gritty of any of this stuff as a business owner. You have to understand what it means so that you can make good business decisions about your business. I never ask a business owner to do debits and credits. That's not what we went to school for. That's not what we're doing. I ask them to be able to look at the statements and say, okay, this looks right, wrong, or whatever. Give me the numbers from this. And that's what you rely on your bookkeeper for. Your bookkeeper, let your bookkeeper do what they do best, debits and credits, take
That's
money
right.
and, pay the bills and that kind of stuff. So, you're going to look at your bank statement every day. You're going to do a weekly cash flow, or your bookkeeper's going to do a weekly cash flow every week. And you're going to review your financials every month with your cash flow budget. That's what I
Perfect,
do.
because I think that's where business owners really get that panic of, oh my gosh, I have to create the P&L. I have to create the cash flow statement. And I always say, just because you can doesn't mean you should. Give that to the experts that can do it. Your accounting should never be done by you.
Agreed. Yeah.
But I know, right? I can only pound this in so many times in a conversation.
Well, look at it this way. Look at it this way. Okay. If you spend your time doing accounting rather than what you do best, let's assume you're a great salesperson and if you spent an hour on sales rather than 6 hours trying to do the books, which is better for you?
Right.
Yeah.
Totally. It's so important. So you talk a lot about systems and processes, and I think the thing that business owners fear and regret is looking at the numbers and understanding what they're looking at, number one, and then always the fear of, oh my gosh, is it going to be bad? How do you address you address the timing of, like, look, it's going to take you an hour a month, a half hour to look at the budgets and 15 minutes a week to look at your numbers. I mean, it's not a lot, but
Yeah.
is there something that can help them understand the ups and downs of those numbers a little bit easier, and what pieces that they should be looking at?
Yeah, they're actually both in both of my books, The Courage to Be Profitable and Profit or Wealth. I mean, both of those books talk about it in English, not accounting babble, but it goes through the details of doing your half hour a month, the details of looking at your weekly cash flow. And quite frankly, the first time you do it, it's probably going to be scratch your head and go, whatever. But by the time you do it the second month, the third month, the fourth month, it becomes really easy. And it's like, what was so hard about this? It's not, it really and truly is not difficult once you get the hang of it. It's like getting the hang of anything. And yeah, when you have hobbies, I hate to use the word golf because I don't think you ever get really, really good at golf.
Right.
Unless you're a professional. But, look at what you've done in your business and learning the terminology and learning everything there. And you worked at it until you got it. The same thing here. You work at it. It'll take you a little bit of time, but not much.
I like it. A little bit of front end training smooths it out for the long haul on here. So,
Mhm.
Ruth, this has been a really, really valuable conversation that business owners truly need to understand, especially as we're getting the year rolling. Grab control over the numbers, because that's one place, one of the few places that we can control in our business, and just grab it. So where can listeners find out more information about your books and the techniques that you're sharing with us today?
You can easily go to my website, which is ruthking.info. And I think you're going to put in the notes, I have a paper that I wrote called How to Tell If Your Financial Statements Are Wrong in Less Than 97 Seconds. And you're going to put that link in there. and feel free, it's free, go for it, look at that and look at your financials, and hopefully you're not doing any of that stuff.
Right, right. And it's never too late to change a financial habit. And if you can change it for the good, then it's going to make your business more profitable, which is what we're all talking
All
about
that.
here, is
Yep.
having profitable businesses.
Yeah.
So thanks again so much. This is wonderful. Listeners, I hope you found an idea or two that you can put into your business today. And please, by all means, go pick up that white paper that Ruth has created so you can learn how to manage your numbers in 97 seconds. I mean, holy cow, that's wonderful. So considering what's happened to businesses in the past year, now more than ever, it's more important to create your own profit plan and make sure that you have a thriving business. So I put together myself some 6 easy action tips that you can put into your business immediately that can make a big impact. If you want to go pick up that free report, that's at failproofbiz, that's biz.com. And Ruth and I would love to hear any of your questions and feedback on this comments today, and even ideas for future shows. So please subscribe and comment on today's podcast so we can hear those ideas. And as always, you can catch Profit with a Plan on any of your favorite podcast players. And we're looking forward to more profitable information on next week's show. So until then, make your plans and profit with it. Thanks, Ruth.
Thank you.